Hi, this is Richard Chamberlain. Welcome back to the Protecting Your Family's Future podcast. This is episode number 103. Today, we're going to be talking about 4 ways to avoid probate. Now, in our episode last week, we talked about 4 problems with probate. If you haven't heard that episode yet, I encourage you to go and do that because today we're talking about how to avoid probate. If you listen to last week's episode, you'll learn why you want to avoid probate. But on to today's episode, how to avoid probate. The first way is to not own the assets when you pass away. So you can give them away. So if you give your assets to your kids, for example, then they own them and you don't own them when they die and they don't have to go through probate. There are problems with this, though. First, you lose the assets. They're not yours anymore. You've given them away. There are some capital gains tax issues with this. If you give away real estate during your lifetime, then the basis in the asset is your basis in the asset. If they receive it when they die, a house, for example, then they receive a step up in basis, which can save them on capital gains taxes. And the third problem with this one is by giving your assets away, again, let's say it's your house, you don't own the house, your kids now own the house. And if they have creditor problems, then their creditors can take your house because it's not your house anymore. It's their house, it's their asset, and their creditors can get to their assets. So giving assets away is not a very good way to avoid probate. It does avoid probate, but it creates other problems with that, kind of unintended consequences. The second way to avoid probate is to use beneficiary designations. Now, you're probably familiar with beneficiary designations already with life insurance, retirement accounts, but you can use beneficiary designations on bank accounts, investment accounts. Here in Ohio, you can use beneficiary designations on real estate and automobiles. So that is a good way to have your assets avoid probate. The beneficiary designation simply says when you pass away to give this asset to this particular person or to these particular people. Now, there are problems with this one as well. Primarily, we are giving assets to your beneficiaries directly, which makes it so that there are no assets in your estate to pay your final expenses, to pay any bills, funeral expenses, taxes that might be due. And that creates a potential issue for who's going to be responsible for paying those things and how will they pay them. In addition, if we're doing straight beneficiary designations to your beneficiaries, then you're losing an opportunity to protect those beneficiaries with the way the assets are distributed to them. If they have creditor problems, if they have spending issues, if they're incapacitated, then the beneficiary designation route is not going to be the best route for them. The third way to avoid probate is with joint tenancy. Now, that's more than one person owns the asset. If you're married, you probably own your home jointly with your spouse. Same thing with bank accounts and investment accounts. When one of the owners passes away, the surviving owner just continues to own it. It doesn't have to go through probate in order to be transferred to the new owner. They already own it. Now, you can also do that same approach with your kids. If you are a single person or a surviving spouse, you can put your kids on your accounts, on your home as a joint owner. Again, problems with that are very similar to what we talked about with the joint ownership. With the outright gifting. And, that is you lose some control over those things. The assets become subject to their creditors. They lose a step up in basis when you pass away. The fourth way of avoiding probate is with a trust, with a revocable living trust. You create that trust, you put your assets into it, and then when you pass away, the assets don't have to go through probate because they're already in a trust. There's already somebody who's empowered to take care of those assets, do whatever needs to be done with them. And we avoid all of the other issues with the three other methods that we talked about. You're not losing control. You're not giving the assets to your beneficiaries now, so you're not subjecting them to their potential creditors. You're creating a way for your final bills and expenses to be paid out of the trust assets, and you're not losing that potential step up in basis when you pass away. The assets are inherited by your beneficiaries, and you can build in those protections for them if you need to. So those are really the four ways to avoid probate. Of those four, a trust is going to be the most comprehensive and the best in all circumstances. Now, that doesn't mean that a trust is right for everyone, but it is something that should be considered by everyone to see if it will meet all of their needs and goals. I hope that's helpful for you today. If you have any questions, you can reach out to us. If you're in Ohio or in Michigan, we can meet with you and talk to you about your estate planning. And we'll see you again next week. Thanks.